Welcome to The Explainer. We're digging into a ceasefire that seemed to pull the world back from the brink, but what if it was all a smokescreen? A calculated move in a much bigger economic power play.
So, all the headlines celebrated this big US-Iran ceasefire this week, right? But behind the scenes, you have to wonder if a totally different story was playing out. Was this a genuine step toward peace, or was it the opening shot in a targeted economic war? Let's break it down.
All right, first up, let's just look at the news that took everybody by surprise. This last-minute deal that, seemingly stopped a major conflict right in its tracks.
So this was announced by President Trump just 2 hours before his own deadline. The deal was framed as, the foundation for some kind of lasting peace. In exchange for the U.S. calling off attacks, Iran agreed to let ships pass safely through the supercritical Strait of Hormuz.
And the market reaction? Whoa, it was immediate. Oil prices, which were totally geared up for war, just plummeted. We're talking Brent crude dropping by as much as 16%. That is a massive reversal that sent some serious shockwaves through the energy world.
Now, on the other side of that coin, risk assets just surged. Investors came flooding back into the stock market. I mean, look at this. NASDAQ futures jumped over 3%. It was a huge relief rally, and the message couldn't be clear. Risk is back on.
And this risk-on feeling was perfectly summed up by Bitcoin. A lot of people see it as a kind of barometer for market liquidity, and it soared to a 3-week high of almost $73,000. It was just pure euphoria right across the board.
But what if this whole thing wasn't really about Iran at all? A really deep analysis from Jose Luis Cava suggests this was just one move in a much bigger, much more strategic chess game.
So according to Cava, the conflict with Iran was never actually the point. It was just a tool. The real goal here, to create chaos. And then, through that chaos, to completely rewrite the rules of the global economic order to benefit certain players.
And here is the absolute core of this theory. The real target wasn't Tehran, it was Beijing. The whole confrontation, Cava argues, was engineered to put direct pressure on China and to basically dismantle a cornerstone of their entire economic strategy.
Okay, just think about this sequence of events. China builds this massive $40 billion railway to get Iranian oil in just 14 days, completely bypassing the tricky sea routes. Then what happens? A key U.S. ally bombs a piece of it. The message is not subtle, right? It's basically, hey, see that expensive new tow you built? We can break it anytime we want. And that, right there, forces China to the negotiating table, and Iran just becomes a bargaining chip in the whole affair.
So if this much bigger game was really going on, why did the media narrative we all heard seem to focus almost exclusively on, imminent collapse and global recession?
Well, this analysis suggests it was all a very deliberate, coordinated media campaign. The goal was simple as they say, meter el miedo en la gente, to put fear into people, to scare the average person, the retail investor, the consumer, just create widespread panic.
And here's where it gets really interesting. Look at the huge difference between the panicked headlines and what the actual market data was showing. While the media was screaming economic collapse, the S&P 500 was quietly bouncing off a key support level. They were warning about a global energy crisis, but the price of oil was actually hitting a technical ceiling at $108 and failing to push higher. And while they predicted Bitcoin would crash, what were the big players doing? They were buying massive amounts of put options, hedging their bets, not panic selling.
So even as the market is celebrating all this short-term relief, the analysts we're looking at are warning about a potential trap that's looming, and all eyes are on this Friday.
The focus now pivots completely to inflation. The upcoming Core CPI data is expected to show a monthly jump of 0.9%. Now, to put that in perspective, that's a really sharp rebound that could totally wipe out all the market's recent good feelings.
And this sets up a classic sell the news trap. You've got all the euphoria from the ceasefire pulling in everyday investors. They're buying high because they have that fear of missing out. Then, bam, the bad inflation news hits on Friday. And the big institutions, the ones who rode this whole rally up, they use all that retail buying as their exit, selling their positions and potentially starting a really sharp downturn. It's a classic move.
So let's zoom out a bit. Beyond all this short-term noise, where's the smart money really heading in this new world order that's being created?
Cava's thesis is that we are at a major turning point. The era of just moving money around on spreadsheets is giving way to a new reality.
Capital is about to start flowing from Wall Street's abstract financial world into the real, tangible, physical economy.
So where's that money going? Well, the new priorities seem pretty clear. Rebuilding military arsenals, massive reconstruction projects all over the Middle East, and huge investments in energy infrastructure, even in places like Venezuela and Cuba. The focus is shifting to tangible assets, stuff you can actually build and hold and use.
So, as chaos is being used to forge a new set of rules, the big takeaway here seems to be to look past all the media noise and try to understand the deeper, strategic shifts that are actually happening. The flow of capital is changing, and the question that leaves us with is a big one. Are the investment strategies that worked for the last decade ready for the world of tomorrow?